Hi friends, welcome to my channel InfoCraze. Today we will discuss some basic questions that may be asked in an interview for entry or mid-level accounting job. The interview questions may revolve around assessing your knowledge of basic accounting concepts. This video will be very useful for people in the field of finance and accounts. If you find the content useful, please like the video and subscribe to my channel for having easy access to my future videos. Here are some common questions that may be asked. Question 1. What is the accounting equation? The accounting equation, also known as the balance sheet equation, is a fundamental principle in accounting that represents the relationship between a company's assets, liabilities, and equity. This equation states that at any given point of time, the total assets of a company must be equal to the total value of its liabilities and equity. Thus, the accounting equation states that assets equal to liabilities plus equity. This equation is the foundation of double entry bookkeeping. Question 2. What is dual aspect in accounting? Dual aspect, also known as the duality principle or double entry accounting, is a fundamental concept in accounting that states that every financial transaction has a dual effect, which are recorded in at least two different accounts. In double entry accounting, each transaction is recorded by debiting one account and crediting another. Debits and credits must always balance, ensuring that the accounting equation, that is, assets equal to liabilities plus equity, remains in balance. For example, when a company sells a product for cash, it records two entries. It debits the cash account to increase the cash balance, which is an asset, and it credits the sales revenue account to recognize the revenue, which increases equity. Question 3. What are fictitious assets? Fictitious assets are not tangible or physical assets, but rather expenditures or losses that are written off over several years instead of being expensed immediately. These are considered assets for accounting purposes because they represent funds that have been spent but have not yet been fully written off against the company's profits. They do not have any real market value or a physical presence. Some common examples of fictitious assets include preliminary expenses, costs incurred during the formation of a company, such as legal fees, registration fees, and other expenses associated with setting up the business. Promotional and marketing expenses, large promotional expenses that are amortized over a period of time rather being expensed immediately. The next question. Question 4. What is a compound journal entry? A compound journal entry is an accounting entry that involves more than two accounts. These entries are used to record complex transactions that affect several accounts simultaneously. Unlike a simple journal entry, which involves just one debit and one credit, a compound journal entry includes multiple debits, multiple credits, or even both. An example of a compound journal entry is a payroll entry where there are multiple debits like debit to salary expenses and debit to payroll tax expenses with credits to bank and various deduction accounts. Question 5. What is a non-current liability? A non-current liability is a financial obligation of a company that is not due for settlement within 1 year from the date of balance sheet. Non-current liabilities are long-term in nature and typically involve larger sums of money that need to be repaid over an extended period. Common examples of non-current liabilities include long-term debt. This includes loans and bonds payable that have maturities extending beyond 1 year. Lease obligations, long-term lease agreements, especially under finance leases. The next question, that is question number 6. What is financial accounting and how is it different from cost accounting? Financial accounting is a branch of accounting which is concerned with summarizing, recording, and reporting of financial transactions that take place in a business concern over a period of time. It involves the preparation and reporting of financial statements to external users such as investors, creditors, regulators, and the general public. The primary financial statements produced under financial accounting include the income statement, balance sheet, cash flow statement, and statement of changes in equity. Cost accounting, on the other hand, focuses on the internal operations of a company and aims to provide management with detailed information about the cost of production, distribution, and selling of goods and services. Its primary purpose is to help management make informed decisions related to pricing, budgeting, cost control, and performance evaluation. With this, we come to the end of this video. If you find this video useful, please like the same and share it with your friends. You can also watch my videos on accountant job interviews, which will give you additional insights. Further, please subscribe to my channel for many such interesting videos. If you have any question, please put your query in the comment section Thanks for watching.